Welcome to the Zacks Roundtable Review, a discussion of current events affecting investors as well as other topics of financial interest, featuring the analysts and editors of Zacks.com. Now that the Dow has had its best 5-week run in a very long time, taking it above the 8,000 mark, it's back under that mark as we tape today. So how did we get above 8,000 in the first place? And what's next? Our panelists will let us know. There's Steve Reitmeister, editor-at-large, Senior Market Analyst Charles Rotblatt, and, of course, top market technician Kevin Matris, all here once again with us at the round table. I think that's a good starting point for this conversation. How did we get above 8,000? Was that an important area to be in? And are we going to see it again?
Which of those questions do you want me to answer? It was an important level. Partly psychological, 8,000 was a big number for us to reach, but also on a technical basis. Both the 50 and the 65-day moving averages, which a lot of people follow, it crossed above that after bumping up against it a number of times, and virtually all the indices coming on the north side of that. So, it was an important thing for us to cross. So how did we get there? We kind of reviewed that a little bit last week, but if you really think about it, you had, the market was just falling. You had oversold conditions, okay? So you had just a little bit of a bump up, and then just things started to, there was just little signs of news. We talked about beforehand, Citibank said, hey, we can borrow money for nothing and loan it out to people make a profit. And like, that's good, that's a cool thing, right? So you got that going on. And then you had, all the folks from the government, the Fed, the Treasury, the President, they are all out there talking up the economy. And started to gain a little bit of traction there. And then some of the numbers, unemployment numbers weren't as bad as expected. Then you get the big Wells Fargo number last week, which really got people excited. And the financials went roaring higher, took the whole market with it. And we ended up with 8,080, I believe, for the close in the Dow. So that's kind of how we got above that important threshold. But as you said, it's teetering right now whether it's going to hold.
Yeah, I mean, I'm hearing that a lot, those phrases, not as bad as, slight stabilization. Is this a feel good, Charles, or is this just not to feel as bad?
Well, I think you need to put it in perspective, and if we're going to use a skiing analogy, the economy switched from a double black diamond to a bunny slope. We're still trending downhill, and gravity's still pulling us lower, but the rate of decline is not as bad. If you look back at October and November, huge shot to the economy. Everything really deteriorated and deteriorated very quickly. But now we look at unemployment. Non-farm payrolls have averaged about 670,000 per month over the last 5 months. A very large drop, but we're not seeing it increase or get progressively worse. We're seeing it with other economic data. We're seeing some earnings numbers that are coming out not as bad as feared. So I think some people are looking around and realizing, okay, things are still getting worse, but I don't see them getting a lot worse, or at least I can see potentially how bad things could get, particularly when you look at potential bankruptcy of GM. Mm-hmm. There's not this fear where you're staring into the abyss and there's nothing looking back at you.
Just real quickly, the precursor to an economic rebound is that the rate of decline has to slow down.
Absolutely.
Okay? And so that's why we say not as bad as, or not as bad as expected. So that's what people were hopeful that was the first sign before the next sign, which would be that it has stabilized, and then you start to see some growth. That's the hope.
Kevin? Hope springs eternal.
Yeah, definitely. What's interesting is that, we had a great 5-week run. It was one of the sharpest rallies we had seen in, I believe, decades. And the last time we strung together 5 weeks in a row of higher prices, you got to go all the way back to September and October of 2007, which ironically was the last gasp of the market because that culminated in the all-time high, and it's been down ever since. But I think what happened with the market is it was grossly oversold, and you started finally to see the market not react so bearishly to bearish news. So if the market doesn't go down on bearish news, that by default is bullish. Then you saw the market rally. As Steve was saying, you saw the bad news start to trickle in, or at least the rate at what the bad news was coming in was starting to slow up a little bit. But then you started to see some good retail numbers, and that was reflected in a lot of the retail stocks. Then you saw a lot of earnings releases come out, and they weren't as bad as people had been fearing. And you saw the market really start to pick up momentum. And as Steve had said, you got above all of the short-term moving averages, 10-day and 20-day moving averages. You got above the 50-day moving average, which is the medium-term moving average. You're still quite a ways away from that 200-day moving average. But what's happening, I think, right now is old support becomes resistance. So you saw the market break down, and then it came all the way back to that support level. So now that support level is acting as a degree of resistance. It's been flirting with it back and forth. I think if the market is able to base here without a dramatic breakdown, you should be able to see a lot of people get encouraged. I think a lot of the skepticism that had accompanied this rally, I think that will finally start to abate. And if you can push through that 8,000 or 8,100 level with any kind of impunity, I think that's going to set the market off on a new leg to the upside.
Charles, there's still some fear out there that the bear could, rear its ugly head again here in April, that the stock market is vulnerable to another retreat.
It absolutely is. And if you look at the bank stocks, they're really trading on speculation. They're not trading on technicals. They're not trading on fundamentals. They're just off in their own little world. And what's important about that is we have all these toxic assets, and we still don't know what the end solution for those assets are. Will there actually be private investors who emerge to buy them? So far, there hasn't been enough because the Treasury extended the period and actually loosened the criteria for those private investors. We're also looking at GM. Bondholders are trying to struggle right now, but we don't know what the end game for GM is. Or we don't know for sure that Chrysler is going to actually team up with Fiat. So those are two very large potential negatives for the market. Also, when you look at the economy, things are still getting worse. And although we expect a rebound at some point, and we do expect the stock market to recover before the economy, there's still that drag. And even when we're seeing earnings that aren't as bad as expected, we're often seeing that accompanied by a decline in sales. So I think some of the positive news we've seen in there is kind of priced in. And I think if the toxic assets don't get solved, we could fall below 6,300. If we do find a resolution, we could still have a pullback, but perhaps the bottom's in. But I still don't think that the bear market's completely over, and I do expect another leg down in the markets. Doesn't mean investors shouldn't be in the market. I think it's very important to dollar cost average. But I think people should keep their expectations in check and realize that this is not the rally that's ending the bear market. This is just a bear market rally.
Still not a lot of company CEOs, though, willing to offer guidance as far as corporate profits going forward from now, through the end of the year. Although I don't know that that's so abnormal given the current, dramatic situation that's out there. But don't we need to see some more guidance toward better times as far as corporate profits are concerned for this to be sustainable?
I think that the corporations and the CEOs of them would have to be insane to try and go out on a limb and try and predict exactly what's going to happen over the next few months. And so, you see a lot of guidance being very modest at best, which is normal. I mean, I don't blame them for not going on a limb. But the question is, what's going to happen now? Okay, if the market were 100% completely logical, it would just sit here for a while. Okay. Now, the market's not logical, okay? But if it was completely logical, we have digested enough, and now we have to wait and see where the economy is going, what's happening in the banking situation, and we should be in a trading range. However, it has seemed like the market wants to rally, and that if it and where Kevin is going, and I've been kind of in that camp too, that this move across the 50-day moving average and the space between that and the 200-day moving average, which is about 9,000, 9,200 right now, that's a lot of space. And if the market could make just a meaningful rise from here, just another percentage point or two, I think so many people on the sidelines who are skeptical would feel like they're missing out on the party. Right. Now, the funny thing is we can make that move all the way to 9,000 and everyone still be wrong. Right. Okay? No, seriously. And then that would be your classic bear market trap. If the market were logical, it would stay in a trading range. The market may not be logical, and it may continue to rally higher.
Right. Or if we can see a decent pullback, not a catastrophic pullback, but if we can get into the 7,500 area, 76, 77, I think that would make a lot of people who feel like they've already missed the move, it's going to give them a secondary chance to get in, get positioned on a lot of good stocks, because while the market is going down, I mean, I think today it's only down to 1.5%, but you're seeing a lot of stocks get taken out to the woodshed. But that's because I believe so many stocks had way too much value put into it over the last 5 weeks. So a meaningful push to the upside or a reasonable pullback, I think that's going to do the necessary attraction of buyers that the market needs.
And I have to agree with Kevin. I think if we can get a trading range, I think that would do more to build confidence in investors than anything else, more so than a sharp rally, because we start getting that trading range, then investors start hearing about other people making money, and they're thinking, I should get into the market as well.
All right, still a lot of unanswered questions, it seems, so there's no way to really bottom line it. Suffice to say from this point that the road to recovery still has its share of potholes. With everyone here at the round table, I'm Terry Ruffalo.